This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 8:58 p.m. on Wednesday evening, Eastern Standard Time on March 24th, 2021. Welcome. This is our midweek strategic webinar, updating people on what's happening with the markets, which we already know. The short term going lower. And these sessions are recorded, uploaded within 20 to 25 minutes directly onto the real-time Twitter feed with the link. So all our great members can click it and listen to it at their own time. Welcome. Full disclosure, purely for financial. These webinars are purely for financial education, not for any solicitation or advice. Second disclosure, options are risky business, so are stocks, so are stock market investments. So please make your own decisions as to what you need to do and deal and manage your own risk management. Okay, let's start. This is probably going to be a very short webinar because, let's be fair, at this point, only thing we can rely on charts, and this is not the first time this has happened. It happens a lot. It happened like 3 days ago, 4 days ago, which we're going to see, where we get a big thump specifically on the NASDAQ, the QQQ, the NASDAQ 100, which also drags down the overall broader market. Okay, so on that note, we are a couple of broader points. I got a fantastic question today from a returning member, and he said, serious question. He said, is there any positive rhetoric out there to prop up the markets other than oversold bounce based on NIMO, stochastics, and other indicators that will give an oversold bounce from some lows? What lower support holds? Who knows? If one fails, sure, there'll be a next lower support. Somewhere it will bounce. Curious to hear thoughts if you could cover in your conference call, which I will. So my answer is that take a deep breath and stop panicking, all right? Because this is a panic situation going on out there, not with retail human traders in general, but the overall market. So the answer was not panicking, but questioning as a naive trader if there is any positive aspect that will prop up the market versus oversold and overbought dance. So here's the direct answer to the question. The markets always trade, always, 100% of the time on oversold and overbought conditions, regardless of what the macro backdrop is. Now, the other question I do want to ask everyone, and everyone should think about this as all intelligent traders and members, is what are the big negatives out there? The 10-year government bond yield is actually stabilized and holding around 1.61%. It is not at 1.75%. It is not at 2%. It is not at 3%. The US economy is reopening. Growth prospects are very strong. Overall numbers are coming out very strong. Housing market has started to kind of ease back a little bit because prices have shot up and there's a very short supply of homes, especially in the mid-range for the average American to buy. The high yield bond index, which is the HYG and the LQD, those are the high yield credit market bond index, were actually substantially, I mean, not substantially, but relatively higher. There doesn't seem to be any meltdown on the credit side, which is the bedrock of the US economy. Fed Chairman Powell is standing steadfast on his promise to make sure that there are no sudden rate hikes or draining of liquidity from US markets, US financial markets, which could cause a disruption. So what are the real negatives? Well, here is the real answer to what is going on. This is coming to the end of the month. There is going to be window dressing, no question about it. There's going to be 1 or 2 days between now and the end of the month where the NASDAQ is going to bounce furiously, which I have repeatedly said to all my members, stay selective, stay small, scalp profits, buy the dips, sell the rips, and that's pretty much what it is. That's pretty much what it is. It's not easy. I didn't feel good today. I didn't feel good. No. Okay. and there's nothing we can do. The real reason why this is happening, there's a massive rebalancing, simple English, movement on pension funds primarily, which are the 800-pound gorillas in the market, to lock in these relatively higher yields on government treasury bonds, on government bonds, government bond yields. Whether it's 1.6%, whether it's 2% plus on the 30-year government bond, 1.61% on the 10-year government bond, they're locking in these rates because these rates, comparatively, based on global sovereign debt, which is basically what do you call government bond debt, are relatively high, 1.6%, 2+%. They want to lock in that. So when they lock in that, they sell a portion of their equities or stocks, and they go into bonds. And that is what is happening right now. And specifically on the NASDAQ, which have very high, from a standpoint of liquidity, it's quite easy to use them as an ATM machine, whether it be selling Netflix at $520, or whether it be selling Booking at $2,200, whether it's selling Google at $2,000, whether it's selling Amazon at $3,000, whether it's selling Tesla at $650. So the bottom line is they're doing that right now. Now, how long that's going to last, that is the million-dollar question. We don't know. So based on that, let's look at a couple of charts. Now, keep in mind, at this point, and I've repeated this multiple times, you do not need to trade every day. If you're going to buy some cheap lottos, fine. But if you're going to go in thinking we're going to just suddenly turn around and run up, which could happen, it's happened before, because we're going to look at the NYMO today, the New York McClellan Oscillator, which is reaching those horrendous levels where it normally bounces furiously from. It almost has a 90% probability, and we're getting very close to that. We're getting very close to that. So, but that's basically it. So keep a bunch of money in cash. We're all getting hit. There's no question about it. But if you are hell-bent on attacking the market in a big way in this type of environment, then obviously your losses are a lot bigger. And I've been hearing from a bunch of members here and there, and they're in a point of complete panic. And I don't blame them. I blame them for a simple reason, is they should have taken down a good amount of money into cash, which I've been repeatedly saying, and then playing around with a couple of very small selective positions, or just playing with the indices, even though that also got hit today, which is the QQQ, which will be the first one to bounce very furiously, in my opinion, based on past experience. So saying all that, let's dive in. Give me 1 second. Done. Okay. So here is the NASDAQ as it looks from the technical standpoint, not from an emotional standpoint. Okay. So here we were just on the 19th, and I believe the 19th was last Friday. Okay. Last Friday, the markets turned furiously at around 10 o'clock, right after it opened, and went up like a moonshot till the 23rd, which was yesterday. Okay, good profits were taken. Small positions were reinstated, like we say, re-entry one, and this is what happened today. So we're not even back to where we were, to be honest with you, to where we were on Friday. Let's keep that in mind. All right, let's keep that in mind. Now, saying all that, let's take a look at a technical pattern that I've been highlighting, and hopefully it will hold, is the inverse head and shoulder. You have the head, you have the left shoulder, you have the left shoulder, You have the right shoulder, right shoulder, right shoulder, which was just Friday. And this is where we are right now on the Qs where we stop. Okay, now we have overshot the Bollinger. That's an extreme scenario. Anytime you overshoot the ribbon, right, the cloud, if you want to call it, it's the Bollinger Band, you always get back in the Bollinger. That's a given. It's happened 100% of the time. Yes, a little bit more slipping and sliding, and then it just bounces very furiously off that. It correlates directly with extreme oversold conditions, and the markets always trade between oversold and overbought. That's just the way it is, okay? Because there is no fundamental huge negative on the stock market in the form of bad earnings or things like that, okay? And I've explained all that just a couple of minutes ago, so I'm not going to waste my breath explaining the same thing over again. So saying all that, this happened on around the 10th of March. It happened around the middle of March. It happened last Friday. And every single time the market bounced off these levels. Will this time be different? I don't know. I don't control the markets. I don't think so. Because the level of emotional fear from human traders is at its extreme right now. We have two great members in attendance today. If this was a market which was up 300 points, 400 points, NASDAQ was up 2-3%, 100, 200 points, we would have a higher audience. That's just the way people behave. It's called behavioral finance. When things get really tight, when things get rough, I don't care how tough somebody is out there, ladies and gentlemen, they all get panicked. So we're in panic stage right now. No question about it. No question about it, okay? I feel it, I know it, that's just the way it is. So saying all that, if this is going to be the pattern, which goes back to the beginning, almost to the beginning of March, or from the first week of March, then we should, technically speaking, hold this level, slip and slide a little bit, and then have a very sharp bounce. So buying those cheap lottos and ending the day with a P&L looking red because they still slip lower, right? Exactly. On the QQQs, and I have been suggesting buying the 322 calls for April 1st on the QQQs, which is probably the easiest way to play the bounce instead of an individual stock, would deliver some very handsome profits. And you have to sell because this level here, this 324 to 310 level, is basically has been basically the primary trading range since all the way back in February. Okay, simple facts, and you're looking at it directly right now. Okay, all right. This is not a feel-good market. I'll tell you that right now. It is not a feel-good market, but neither is it something that's going to completely without the reflex bounce, and then we see what happens after that. Like I said, my forecasts are only going to the end of the month, early April, and then we see what happens. All right, but as I can see from the DMs that I get, there is basically a level of complete despair and hands up, like that's it, it's all over, crying uncle, right? What will help the markets? Well, my question again is, like I asked a few minutes ago, what is so bad about the fundamentals on the market? What's so terrible out there that causing that, other than this huge rebalancing and stuff that is happening right now? So that's the first chart. The second chart that I wanted to show is the NIMO, which is extremely, extremely important. And it's getting to a level where it normally has had a pretty substantial bounce. And let's get the drawing tool out here. 1 second, please. Okay. Every single time it reaches these levels, which are somewhere around 60, 50, this is where we are tonight. getting down to those levels where it's horrendously oversold. You can see that very clearly. Look at these two. Okay, RSI is at 38, same levels, same bounce levels that we have seen since February. You tend to get a snapback bounce. You tend to get a snapback bounce. You got a snapback bounce, then you got a pullback, and then a huge one. And this was at the beginning of March. So we're getting there. And this is telling us that this measures both the emotional component of traders, and it also measures the technical component of the market, which is that the baby's being thrown out with the bathwater. Look at these great stocks. They're down like huge, huge. No bad news on the companies, but they're just getting sold. So this is certainly telling me that give or take 24 to 48 hours, I've said this hundreds of times over the past couple of years, you generally tend to get a very sharp reflex bounce. And we're getting there. And we're getting there. And this time is going to be no different, in my opinion. Let's take a look on and I'm focusing on the NASDAQ, obviously, because that's where most of the oversold damage is lying. This is what it looked like yesterday. It hit the downtrend line, which was right on that red line here, 50-day moving average. And this is what happened today. This is what happened today in the afternoon. Right there. Big, ugly red candle. Now, this happened on the 24th of February. It happened on the 26th of February. It happened on the 10th of March. It happened on the 18th and the 19th, but let's look at this as the 18th, and look what happened. The next day, it fell, created a nice hammer. Well, this is more like a doji candle, and then it shot up hard. So on the short-term basis, this is what we're looking at. We're almost there. We're almost there. I'm not putting my feelings and my thoughts or anything. I'm just showing you what I see on the charts. I'm just a faster messenger on the markets, and that's all I'm doing. I'm doing my job, okay? So basically, we're almost there. You have the slow stochastics, which shows the longer term picture, and the slow stochastics, believe it or not, did not even get to extreme overbought conditions like we did back on the 16th of February, right there, when it hit 338. So lots of red candles, lots of green candles. Let's see where we go. The next thing I wanted to show was, let's see here, the VIX. The VIX is not showing any level of pure panic, even though the overall indices are. The Dow was up a couple of hundred points today. The Dow Jones Industrial Average, by the end of the day, they succumbed to the pressure of the selling and the rebalancing and all that stuff, specifically the selling on the NASDAQ, which was down more than 2% today. The Russell today was down 6.7%, if I'm seeing this correctly. Okay? These are horrendously hardcore numbers. And if you look at the VIX went up, but it hit that upper level on the resistance right there. Didn't even get to major resistance, which is 2192. And then at the end of the day, had a little red candle. Overbought, not fully overbought yet. On the slow stochastics, that means a little bit more selling to come through. Let's take a same look at the VIX on the daily basis. Now, the daily VIX is basically starting to approach this downtrend line. And this one's telling us that whatever bounce that we're going to get needs to be sold, according to this chart. Because it certainly, the VIX came down to a level of 18, which is, again, very oversold. And right now is starting to move up to where it moved up to on the 19th, which was Friday, which is 23. And you can see here, it's well off these levels So if the market was truly in a mode to consistently capitulate and go into a severe bear market or something crazy like that, then the VIX would be a lot higher, a lot higher. Okay, but we shall see, because the VIX seems to, every time it hits this wall here on a short-term basis, it tends to pull back, and it's getting overbought very, very quickly. Let's see. Now, going back on the NASDAQ again. And remember, it doesn't matter whether you own the finest company in the United States, okay? They will all get hit. They will all get hit when the overall indices fall. That's just the nature of the beast. That's what we got to deal with. We don't control the markets. We just have to handle what we can control, which is the few bucks that we manage. I mean, that we trade. So saying all that, this is what the NASDAQ looks like. Let's get this thing here going. Everybody in life, and no, there's nothing wrong with that, wants easy answers. There is no easy answer at this stage of the market. There is no easy answer. I just want to warn everybody, okay? This is not 1 + 1 = 2. There are people like Cathie Wood, for the finest fund managers in the world. ARK Funds, Cathie Wood, the lady who basically said Tesla was going to go to 3,000. She's done so well for her fund over the past year or so. She's getting completely bamboozled. She's getting hit so hard. And part of the reason the markets get these, forced margin sellouts is because they have to sell part of their portions of their holdings in order to come up with the money, because I'm sure some of her clients and stuff are all panicking. All right? So if a person like that is losing millions of dollars a day, then who are we? Exactly. Now, somebody could step up and ask me, well, why don't you just freaking short the market? Well, blame me for it. But this is my theory. When markets get so technically oversold on different metrics, and I'm showing you a few of them, I can't bring myself to short the market, because every time that, many years ago, every time I tried to do that, I got killed. The markets went the other way, higher. If you guys want to do it, feel free to do it. This is a free country. You go there, you buy some puts, you do what you need to do. That's not a problem. You don't need to wait for me. As you know, I've reduced my trading down to a trickle. That's why there's only a few posts during the day. I start off a bit later in the morning because I want to see how the market settles. If we get a big move up, sell partial or full profits. But otherwise, sit back. Sit back. You don't have to be Speedy Gonzalez all the time, like, trying to trade every 5 minutes in the market. But do what you want. If you truly believe this market is going to completely crack, and the NASDAQ, which is down almost 10%, if not more at this stage, is going to go down 20%, don't ask me, because I'm going to say no, it's not going to go down 20%. Individual stocks are down 15, 70, 20% anyway. But if you believe that, then go ahead and buy some puts on different assets, on individual stock, on the Qs, whatever you want to do. Because you're all independent traders. So this one is depicting the same thing: head, left shoulder, multiple right shoulders, and this is where we are. This is the daily chart, which on the stochastics is certainly showing a downtrend, which could suddenly snap back up, but certainly showing a downtrend. McClellan oscillator, extreme oversold. And the last time this happened was right here, and the NASDAQ took off in a hurry. Big time move, multiple days. Last time it got this oversold. It's there. It's almost there. Now the MACD is showing an interesting technical signal. It's actually still green. The MACD is still green, which is extremely unusual, given the thump in the market in the last 2 days. It's still green. That's a positive divergence. I believe this visual that you're seeing of the NASDAQ 100 index is because this short-term rebalancing by the pension funds to buy bonds and selling part of their stock portfolios and all that stuff, to buy bonds and do some weighting and all that stuff. That's all high-level stuff. Don't expect me to teach, to fully explain all that to you. You guys can read up on it, all right? That's what the big boys do. We're not big boys. We're the little guys. And the little guys cannot emulate the money management techniques of the big pension funds and the mutual funds because they run on a different level. Sometimes they buy a stock, they won't even look at it for 3 years. When was the last time you bought a stock and didn't look at it for 3 years? We're all jumping jack flash. We want to see everything go up every single day, right? Different outlook on things. Now, on a shorter term basis, this is what we're seeing. Believe it or not, let me just make this. Okay, on a shorter term basis, it's the same story again. Drawing tool, let's get the highlighter. Okay, right shoulder, right shoulder, right shoulder, right shoulder, left shoulder, head, triple bottom. That was back 3 Fridays ago. Okay, here's your neckline, the big neckline, and here's your overall trading range. On a shorter term basis, this is the 1 hour chart. Look what's going on underneath the surface. Extreme oversold. This was the case last Friday. Extreme oversold, same level. This is the case today. And every single time it got this extreme oversold, the markets tended to bounce. McClellan oscillator is not even that damaged. And this is getting down to those levels where it normally precedes a reflex bounce. So that's pretty much it, guys. I really nothing more to say. Any questions, anyone? Like I said, this is going to be a short and straightforward, speak the truth. Anyone have any quick questions?
Hey, Frank, it's Ed. How you doing, bud?
Yeah, go ahead, Ed.
Hey, with Biden talking about coming up with another $3 trillion, for the stimulus, what do you think about any plays for stocks, common, long positions,
Sure.
electric?
Same stocks which are infrastructure oriented. One of the best ones, which was, believe it or not, up $10 today, even in this market, if I'm seeing it correctly. Yeah, URI, United Rentals, mentioned it many times. It is a straightforward play on anything to do with U.S. economic growth and infrastructure. URI. You could look at Caterpillar. You look at Deere, heavy machinery. You could look at companies like Cummins Engine, but let's stick to the ones that I know best. United Rentals, Caterpillar, Deere, and of course, infrastructure would be a huge boost for the Russell 2000 because a lot of, that's US centric, made in USA. The Russell 2000 would be the biggest beneficiary from the index standpoint. So those are the ones you'd be looking at. And of course, there's a lot of small companies, which are obviously participating in that. But specifically, those are the ones that I'd be looking at. Caterpillar, Deere, United Rentals, number one. Can't believe the stock was actually up $10 today. Whoa, that's huge. That's huge. So that would be the infrastructure play. Mike, Dom, any questions?
I think I missed the explanation of why, because I was looking at the 10-year today and I saw it was kind of like
Okay, so
baselining.
all you got
It,
to do, because I'm not going to repeat it, all you got to
okay.
do is when I post the link, because I gotta apologies to everybody, but I got a situation going on in the house with my little doggy again. So it's one of those things. So I just wanted to get this webinar done and go back to him like right away.
Okay, got it.
All you got to do is just click it, and I explained it very clearly that what this whole thing that's happening, it has to do with pension fund rebalancing. And I also mentioned the same thing that you just mentioned, which is interest was actually coming down. So why did the NASDAQ fall like that? And
Right.
okay, now the Dow Jones transportation average was also up quite big. And on that front, you might, and I haven't really trade it, like for example, UAL was up nicely today. Okay, companies like JB Hunt, companies like, and I'm going to make a list of them, trucking companies, transport companies, on the transportation index, Navistar. So those type of companies, Navistar International is, I really don't trade that stock that much, but anyway, so you might want to look at it. JB Hunt, United Airlines was doing really well.
I saw 3M. We've traded that in the past. Was up today too.
Oh, thanks for reminding that. I didn't know that. Okay, let me put that on my other screen. So 3M is another major, not major infrastructure play, but that was also up because right now there's a rebalancing going on. Okay, and the rebalancing is basically buying these New York Stock Exchange large cap companies, what they call value plays, and at the same time, more importantly, they're actually buying bonds, and that's why bond yields were down. So that's basically it, guys. All right. Nothing much to say. I don't want to, keep on harping on that. But like I explained very clearly, where the reasoning, what I'm thinking, doesn't run the markets. All right. What you're thinking doesn't run the markets. So we're all dealing with some pretty tough moves here. But at the same time, as long as you keep the move small, it's not going to be that devastating because this is hurting a lot of traders. What the market is doing. The market is not your friend right now, but neither can you really short the market in any large degree. Because you try to start doing that at these levels, you can rest assured there's a very high probability that the market's going to turn around and just bite your head off. Otherwise, I'm not that stupid. I would go ahead and just short the market really hard. So that's pretty much it. But I'm seeing stocks here which are literally just unbelievably cheap on a relative standpoint. Now, one of the tech stocks which has fared pretty well in this market, believe it or not, even though it was down 15 bucks today, is Netflix. Okay, so you want to play a fast run on a good day in the market. The problem is when the good days in the market starts, it starts overnight. So by the time the market opens, they're already up. But a stock on the radar that you might want to put out there is Netflix. Facebook's been overall doing pretty okay, and from a large cap standpoint. But I've noticed that Netflix has been moving in a range. I was looking at it the other day like a stupid. I didn't get into it, and the stock basically went up. Other day meaning last Friday, the stock was $502. It went to $544 yesterday. Even today, at the open, it started dropping with the market, but it went from 502 to 544. It's pretty significant. So that's a stock that it had a huge upgrade. And let me just bring the chart in. So instead of me just talking right there, here's Netflix. Okay, this was last Friday, the 19th, 10 a.m. in the morning, $500 goes to $542. Extreme oversold again on the hourly charts. So this stock is something that can be traded for active traders. So and everybody's getting smashed. I mean, look at this. Amazon goes up, then gives back like a whole bunch. Amazon overall uptrend is still pretty good, but I can't afford the options. They're way too expensive. Apple, same story. It's starting to do okay, and then thump. Then that little, like, you know, what's that little game that kids play? Whack-the-mole, right? Whack-a-mole. So basically, that's pretty much what the market did today. It was doing fine till yesterday. Looked like it wanted to get up. This is Apple's 50-day moving average. All these stocks eventually will get to their 50-day moving average. How quickly they will, that's the million-dollar question. There's a lot of mixed signals on the charts right now because everything's happening very quickly, very short term. On that note, I really have to go. Any questions you have, like I said, it's very sporadic trading till I start to see some real extreme, deep, hardcore oversold signals, which we're almost getting there. Otherwise, it's going to be limited trading, like I say in the morning, and just a few things here and there. I'll put up the charts if I'm not at my desk, like I haven't been, you know, because of not of my choice. I do a couple of things. I'm posting off the phone, but like I said, just sit back. Just sit back or do whatever you want to do. You want to short the market? Feel free to do it. I'm not going to be shorting the market here. Market's way too oversold, specifically on the NASDAQ. If you want to do it, feel free to do it. You probably make some money intraday. All right. Don't always have to rely on me. And so basically, this red candle is just, you know, purely today's function, and we'll see what happens. In the meantime, if you have any questions, anybody, doesn't matter where I am, I'll check my DM, and I'll certainly try to answer back with a reasonable explanation. On that note, God bless you all. I really have to go. Thank you again.
All right. Good night.
This conference will now be recorded.